Welcome to the INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Wednesday the 17th of March. What are you going to learn in today's video? Well, it is the Fed meeting today. The announcement of monetary policy for the Federal Reserve is at 1800 GMT. Don't forget that is an hour earlier than normal. And markets are in a bit of a holding pattern ahead of this announcement. A slight amount of dollar strength, generally speaking, a little bit of risk aversion coming ahead of this meeting. But generally speaking, we're not looking for a great deal of action from the Fed, but the real interest will come, I think, with the dot plots where the Fed members give their views on interest rates coming further down the line. And the interest will be whether more members are suggesting that there's going to be an interest rate hike in 2023, and that could mean that the Federal Reserve Chairman Jerome Powell has a bit of an interesting press conference to try and justify his position of being very dovish still. So in terms of the support resistance table for the INFINOX levels, that comes at the end of the video, so don't forget that. Now, in terms of the markets we're going to be following today, well, the big markets are euro dollar, and certainly euro dollar seems to be a key market that is just in a holding pattern. It's just failed in a rally recently, but will it now come back to test the key support? We look at the technicals. Looking at the gold chart, again, a gold price has rallied up to a resistance pattern. Previously, these have been selling opportunities. Is that again the case? And on US futures, on the S&P 500 futures, bit of a breakout to an all-time high recently, but it's just stalling a little bit. What does this mean for the technicals? Let's have a look at the charts. Moving on to the INFINOX MT4 platform now, we can see that the chart of euro dollar shows a bull failure again around this resistance area, 1950 up towards 2020. I said that last week. And it failed at 1990 and fell over 3 negative candles in a row now, looking like a possible fourth. And the issue that I have is the momentum of this failing again around that 45 to 50 area on the RSI, the relative strength index. And it looks like rallies are still a chance to sell on euro dollar. And obviously, the Federal Reserve will have a key impact on the near-term outlook for euro dollar today, and we could see some volatility around that. But generally speaking, the technicals are suggesting this is a negative chart outlook with the falling moving averages, and it seems to be selling into strength consistently. So a possible retest of that support at 1835 could be seen, and below that you could see 17 figure and maybe 16 figure in due course. So watch the resistance. I think at 1990 is clearly an important level initially there now. Right, moving on to the gold chart. And we can see that gold has rallied back into resistance actually. 1740 up towards 1765 is where we see the resistance coming in. And is also around about the top of that downtrend channel and this moving average, which is 21-day moving average. So 3 issues of resistance there, 3 barriers for gold to break through. Again, with the momentum, every time momentum on the gold gets towards this 45 to 50 area, it falls over. Rallies are still seen as a chance to sell. These small bodies of the candlesticks, again, don't look especially great for gold, but obviously, again, the volatility on a near-term basis could come from the Federal Reserve meeting tonight, but we'd still be looking, I think, at selling opportunities on rallies. And finally, let's look at the S&P 500. Moving into all-time highs in the last couple of days. Just zooming in, you can see that the strong bull candles have just started to falter a little bit. The magnitude of these bull candles are falling as the market comes towards this resistance of the all-time high. It did move to all-time high territory in the last couple of days, but momentum has been strong recently, but not in the last week or so, where the RSI is just beginning to roll over around the 60 mark. Is this the point at which we start to see, if that is the case and RSI doesn't get above 60, that would suggest more of a ranging condition potentially for the S&P 500. So we're going to quickly dip into the 4-hour chart. Any signs there? Not really. The momentum just consolidating, I think, on the 4-hour chart. On the 1-hour chart, if you start to see momentum going below that sort of 35 to 40 area on the hourly RSI, again, that could be a sign that this rally is falling over. So thank you very much. I hope you found that video interesting and informative. Join me again for more INFINOX market insights on Friday, where we'll be discussing how markets are looking towards the end of the week. And with that, I will leave you with the INFINOX support and resistance table, and I wish you good luck in your trading, and I'll speak to you soon. Thank you.